Just as we think we're going to get the Clarity Act across the finish line and make some progress towards making America the crypto capital of the world, we have a little weekend Mother's Day pump and things are looking good. But in the late Sunday evening hours, we get a letter circulating from the CEO of the American Bankers Association. And even though they won the battle over idle yield, and that's not going to be allowed going forward, as it was a threat to the banks and their deposits, but that's not enough. And the CEO of the ABA is sending out a letter the week leading up to the Senate banking markup, urging immediate engagement from bank CEOs across the country. The bankers are still putting up a fight. And this brings us to the final battle over the Clarity Act and the incredible opportunity that it presents to front run these digital assets before full regulations are passed and the masses realize that crypto, digital assets, and this technology is to be respected. And you probably are going to want some exposure to the asset in the sector as well. So we're going to break down this final battle for you guys here this week. It's going to be a busy one. Make sure you guys have subscribed and hit that notification bell so you don't miss any of our updates. And I'm going to ask a quick question. Any feedback or questions that you may have for I Trust Capital, drop them in the comments down below. I'm going to be interviewing Jared Feldman from I Trust Capital here this morning, and I want your guys' feedback. I want your questions. I'll take it straight to the team over there at I Trust Capital, a very valuable resource for our community. And as you guys know, the one and only sponsor that I do have on this show, we really do appreciate that. They have 3 products, the IRA, the premium custody account, and the treasury account. So I'm just going to ask you guys to drop your questions or comments for them down below. We're going to talk about how the Clarity Act and the rules are going to impact their business and how they can bring rewards to the XRP community and the broader digital asset community. So drop those down below and we'll make sure to pass those along. Looking forward to that conversation this morning. But Galaxy Research just dropped an incredible report here that lays out the facts. The banks have it wrong on stablecoins. Our new report is the most comprehensive model on the impact of stablecoins on the banking system and treasury market. 60 to 70% of stablecoin growth under Genius will originate offshore. This is opening up exposure to people outside of our country to US dollar derivatives, whether it be Tether, whether it be USDC, ROUSD, or other US dollar stablecoins that'll be on, listed across international exchanges, across decentralized exchanges, all around the world. You're going to see 60 to 70% of stablecoin growth, according to this report from Galaxy, which Galaxy might have their bias. They're in the digital asset space, but I haven't looked in depth on where they got these numbers, but this is what they're saying, 60 to 70% of the stablecoin growth outside of the US. We need that if we want to maintain reserve currency status. Imported deposits from offshore will exceed domestic deposit migration by roughly 2 to 1. So for every dollar that's moving out of a bank because of a stablecoin, 2 are going to be coming in offshore. Each newly minted Genius stablecoin generates approximately 32 cents of net US credit. So we're expanding US credit. Total credit expansion through 2030 is projected at 400 billion in our base case and 1.2 trillion in the bull case. Treasury bill yields compressed by 3 to 5 basis points, saving taxpayers up to 3 billion annually in borrowing costs. And we know how much we want to get the interest rates down right now, with Fed Chair Kevin Warsh set to be confirmed this week. Interest pass-through is not an existential threat to U.S. banking. It reallocates margin rather than eliminating capacity. It actually widens the pie, widens the use and the adoption of the U.S. dollar. And so we need it. It's been a matter of national security. But the banks are so threatened by the amount of profit that they'll be able to put in their pockets, and they're so greedy that it's not enough that they won the fight on idle yield. They're making this push. American Bankers Association CEO Rob Nichols sent the following letter on Sunday to every other bank CEO in the country, asking bankers for immediate engagement on stablecoin yield policy. Wait, hold up. We've been doing this since February. I mean, some companies like Ripple and others have been engaging with banks and regulators for years. And we get to the final finish line. You can see the end of the tunnel. The tiny little light's getting a little bit bigger now. We're about to make it out of the darkness into the light. And now, the American Bankers Association CEO says now it's time for immediate engagement on stablecoin yield. No, you guys already won on stablecoin yield. Comments from the chief legal officer of Coinbase, Paul Grewal. Maybe the CEO didn't get the message from the people actually in the room at the White House in meeting after meeting. We've already had immediate engagement. You got idle yield killed. I know because I was there. You weren't. Take yes for an answer, move on, stop wasting the time of the Senate and the American people. Cody Carbone, CEO of Digital Chamber. The arrogance is astounding. I would echo that statement, both these statements here. For months, the banking lobby refused to engage on stablecoin rewards. They didn't make this a red line during the Genius Act. They didn't stop the House from advancing clarity. Now, days before markup, after months of saying, we won't negotiate, they're suddenly demanding immediate engagement. Bad faith policymaking in an 11th hour attempt to protect incumbents from competition. Consumers deserve innovation, competition, and better financial products. Stablecoin rewards aren't radical. The banking lobby had every opportunity to engage constructively. Instead, they chose obstruction, delay, and now panic. Let's get going and move this forward. See you Thursday. Love these statements from Cody Carbone, CEO of Digital Chamber, Chief Legal Officer Paul Grewal. I appreciate the attitude and tone. Coinbase, they put up, a big fight here, and ultimately we conceded. We gave them idle yield. You're not going to be able to earn interest or yield on a stablecoin for just holding it simply on a platform. You're going to have to engage in other activities to earn that yield, or what it's being referred to now as rewards. So it's going to be activity-based rewards, no idle yield on stablecoins. So this is what we've conceded, and the banks still don't want to accept that. It's like we've signed the truce. We've made peace. We've agreed to a peace deal, and then we turn around the next day and the bombs start dropping and the attacks start coming again. That's what we're dealing with the bankers here. And this brings us to the final battle and why this is the last great opportunity to load up on these digital assets before regulations. Guys, this is a fact. This isn't clickbait. This isn't hype. This isn't last opportunity, last chance. I use final battle, obviously a little bit dramatic, and it brings some attention. But to really iterate the point here, that this is just fact. And I brought this up with the ETFs as well too, that you were going to have a moment in time to load up on these digital assets before the ETFs went live and Wall Street started selling it for us and pumping and juicing this market. That opportunity's gone. The ETFs have gone live. Most of these digital assets are trading at multiples higher than they were before the ETFs went live. So your warning that I was giving you back then, hopefully you took it. Many of you did. That's why we're still up, even though XRP's back down, market's back down. A lot of us are still up on a lot of these positions. This is the final moment in time before Clarity Act passes, and this opens up institutional use at scale of this technology. So the window of opportunity before regulations go live is now. We're right at the end, and whether the bankers stall this up and maybe you do get till 2027, God forbid, we don't get it this year, not before midterms and it gets pushed till 2027, God forbid. But that gives you about another year to acquire these assets, which would be a blessing for some people. That's something that we're taking advantage of right now because I don't think we get another year. They want to get this to President Trump's desk for signing into law by the 250th anniversary of this country, July 4th. We want to celebrate America, and I'm telling you right now, they're going to do everything in their power to juice these markets up until this election. And with the Clarity Act signing too, it's the perfect combination to juice the crypto market like we've seen before. It's going to come back again during the depths of these bear markets and corrections. At times, it feels like it's never going to come back. No, it is. Look at what's happening around us, right? And so this is the final opportunity to acquire these digital assets before the Clarity Act takes them to a new level. And they'll never retreat back to some of these prices that you can buy them at right now. Now, for Bitcoin, it pumped up to 82,500 yesterday, and we're watching as it trades at about 81,300 this morning. For XRP, it pumped above $1.50. It actually broke out of this consolidated wedge. These two trend lines that I drawn here, XRP's broken out up to $1.50. back up to $1.48, $1.49 this morning. So these markets are having a good time. ZBCN still moving, back up. 0.0038 is where we rejected off this morning, but still catching motion over here for Zebek. And boy, if you caught this pullback that we warned about on Zebeki, you're up 100% right now. My oil long is in profit as well too. The market opened up right here. This vertical line shows you the last hour candle for the Friday chart, and then we open up Sunday yesterday during the futures. Hope. By the way, huge shout out to all the mothers. I hope everybody had a fantastic Mother's Day. I keep on making the mistake of hosting at my house and having barbecues and telling everybody to show up at 3 right when the futures market opens up. But yesterday I did. I snuck away after I got done grilling. I went and I checked the charts real quick, and I saw the oil had jumped up to $100 per barrel. And so my oil long is in profit right now, even though they did beat it up. Looks like somebody's defending that $100 per barrel level, and they pushed it back down here to 96. But we're back up to $98 as I record this update. But we love to see, it looks like some inflows are starting to return into the digital asset space because folks are seeing, okay, Clarity Act's about to get passed. This is not going to be, this extended timeline that continues to drag on. We're starting to see the finish line is near, even though the bankers want to resist, even though this final battle, we thought we were done. We were ready to just be the XRP family. We didn't care to be the XRP army anymore, but it appears we might have to grab our shield. We might have to grab our sword for one final battle to get Clarity Act over the finish line. So if you guys appreciate the updates, make sure you guys stay tuned all week. Smack that thumbs up for us. Make sure you subscribe, hit that notification bell. We'll be recording the interview with iTrust this morning, so drop your questions and comments for them down below. Really excited to get that feedback from you. And as always, we're going to continue to bring the best community resources. It's all linked up down below or at my website, zachrector.com. Happy Monday. Busy week coming up. Stay tuned for more. God bless you all. I am your host, Zach Rector. I really appreciate all of the love and support. If you want to support the channel, just remember that you can start by smashing that thumbs up for me, sharing this content far and wide, and everything else is at my website.